We call them stealth price increases. What's happening is the car makers are scaling back on the incentives, the rebates, and the cut rate financing deals. They're increasing fees like delivery fees, sometimes even fees for things like floor mats. They're doing it in a way that they don't have to change the sticker price, but the actual cost of a car to a consumer is going up by hundreds a month.
And what's the response, you think, from consumers? Do we know yet if they can take it?
Yeah, we already saw sales starting to slow in the month of May. They were supercharged in March and April because everybody was rushing out to get the cars that were pre-tariff, that didn't have, the tariff costs associated with them. So they were lower priced. And there were some deals that were running out there. Ford and Stellantis both had employee pricing for all deals. So that got a lot of interest, but that has slowed because those pre-tariff cars are starting to go away.
So do we have any feedback from the dealers about maybe how are they reacting? Are the consumers, I don't know, not willing, but are they in fact paying more, or are sales, the volume's going down?
Because when you think about it too, like if you're already going to pay like $40,000 for a new car, if you do it by 41, like, I don't know, you're already paying so much. You're going to go on a loan system anyway, Keith.
Well, part of the problem is the average price of a new car is almost $50,000. It's at record highs. So if you are already paying $750 a month for a car loan, 18% of people are paying over $1,000 a month on their car loan. Yeah, if you raise the price a little bit, they're out. They go to the used market. That's just the way it's going to be. Because the cost creep has been slow and under the radar like this, their reaction has been slower. But what the dealers I spoke with said, they are starting to notice. They're seeing a car that they might have shopped a couple of months ago suddenly is $100 more a month, and they're saying, no thanks.
Yeah, because I'm just looking at your reporting here, Keith. Price hikes could lead to a decline in car sales, with a recent survey finding that 65% of new car buyers would walk away if monthly payments rose by just 5%. So it sounds like, I mean, again, people, they're paying more for everything, and a big jump in your car payment is probably not going to be something you want to deal with.
Exactly. We're in a very price-sensitive market right now. There's inflation everywhere. The car is the second largest purchase a person will make after their home. So they're very sensitive to that, and they don't want to feel like they're getting ripped off. So there is this expectation that once the pre-tariff cars are gone, we're really going to start seeing sales decline. And we also, by the way, are starting to see car makers just raising the sticker prices too. So beyond these stealth price increases, now we're starting to see a few car makers say, yeah, we just have to raise the price of our cars. Mm-hmm. The worry, of course, is that they'll get attacked by the president, as Walmart did when it raised prices because of tariffs.
Before I let you go, you mentioned this is too expensive. They'll go to the used market. How's the used market doing right now?
It's good. It's healthy. But again, average prices there approach $30,000. So the price of a car, new or used, is near record levels. So the demand has remained pretty solid, but that's expected to soften as prices go up on both sides of the car lot, new and used.